There's this concept of alpha and beta when it comes to trading and investing that most retail traders don't look at, and it's very important. For you to understand this concept, you first need to understand what we call the market benchmark. We have S&P 500, also known as the Standard and Poor's 500, which contains the list of the leading 500 publicly traded companies in the United States. So this is like the market benchmark for people who doesn't want to go into trading and investing. They just want to do their normal business or their normal job. What they will just do is take their income, set it aside in the S&P 500, and whatever returns it generates, maybe 8%, 10%, they're okay with it. But for hedge fund managers or retail traders that want to outperform the market, that is where alpha and beta comes into place. So you just don't want to put your money in this benchmark. You believe that you can outperform this market, okay? And wealthy people, they take their billions of naira, billions of dollars, they take it to hedge fund managers, asset managers to outperform the market. So what is alpha? Alpha is basically your skill or your edge or your talent in the market. If you believe that you can outperform the market, your alpha is the extra return that you generate more than the market benchmark, which is S&P 500. So as a trader or as an hedge fund manager or as an asset manager, S&P 500 gave 10% return for the year. If you are able to deliver 20% return or even 15% return, the extra 5 or 10% return above the market benchmark of 10% is your alpha. It shows that you are truly skillful, you truly have the talent and the edge to outperform the market. So if your alpha is positive, it means that you can truly beat the market. But if you have a negative alpha less than 1, that means that you cannot outperform the market, and it's better for your investors or for you to just put your money in the S&P 500 and focus on your job or your business. So alpha is very, very important. Do you truly have the alpha to outperform the market? If not, just put your money in S&P 500. Okay, I'm sure that you now understand alpha, so let's move to beta. Beta is how the asset you've chosen, the stocks you've chosen, or the portfolio you have built, how it moves alongside the market benchmark. That is the movement relative to S&P 500. So let's say you have chosen Bitcoin or gold in this previous year, and their movement, that means their volatility is so high, they have a beta that is above 1, and they were able to what? Seriously outperform S&P 500. We all know that Bitcoin and gold did well last year, so they had a beta of 1. If you have added them to your portfolio will have moved way higher than the market benchmark. So when you factor in risk and volatility, that is your beta. And if the stocks, the assets, the portfolio you built moved lower than the volatility of S&P 500, then that is a negative beta, right? So your beta is how volatile your portfolio is, or how volatile the assets that you are choosing is. And if they are actually very volatile, that means you might be incurring more risk. Okay, so beta has to do with the movement relative to the market. Is it moving way above the market or lower than the market? And it factors in the risk that you are employing and beta factors in the risk that you have employed in making this return, while alpha looks whether that risk worth it, right? So to keep it simple, alpha looks at your skill when it comes to trading and investing, your edge, your talent. Can you truly outperform or beat the market? If you don't have the skill, if you don't have the alpha, then there's no point. Just put your money in S&P 500. Whereas beta looks at how volatile the assets, the stocks, the portfolio you've built, how volatile is it relative to the S&P 500? Is it much more volatile or less volatile? Beta also factors in the risk that you have employed in getting your return, whereas alpha looks whether that risk worth it, right? That risk, does it worth it? So guys, that's just the concept of alpha and beta when it comes to trading and investing. This is something that is very, very, very important. You need to know whether you truly have the alpha, the skill, the talent, the edge, and also your beta is what you are investing in or you are trading. Is it moving with the market, or it is moving lower than the market? Is it moving higher than the market, or moving with the market, or lower than the market? So thank you very much. If you have any question, kindly put it down in the comment section below, and if you want me to cover any particular topic, also put it down in the comment section below. Until next time, keep learning. Kindly subscribe. Bye.